Hey everybody, Jay Glazer bringing you got it, another episode of Guidance by Glazer. Today we are going to talk about the three most important conditions for obtaining financing and obtaining the loan. So, what does that mean? What it means is the financing landscape and the financing world is one that is highly misunderstood, both in New York City and more domestically across the country. And I'm going to explain what the differences are between getting a loan in New York City and getting a loan in other parts of the world, and then specifically, as I said, the three conditions as it relates to ensuring that you do get approval and you do get the financing you seek to buy that great dream house that you so desire. So let's just jump right into it. The first condition for obtaining a loan is your condition, the buyer condition, your ability to obtain the financing. So what does that mean exactly? So essentially, when a bank looks at your profile, they want to ensure that you, as the buyer, are credited and have the credit to purchase the home. Now, one of the primary misunderstandings that buyers have is, oh, well, I have great credit, therefore I qualify for a loan. That's an amazing first step, and credit is a very important component of obtaining the financing, but that's just one component. There are many others, and when you go into the underwriting process with your bank, you'll soon learn that you'll need to provide a full gamut of documentation to ensure that you are qualified to obtain financing. That includes letters of employment, you have to verify your credit check history, you have to provide them bank statements, you have to provide proof of employment, you have to provide tax returns, you have to provide W-2s, 1099s, K-1s, whatever the case may be, whatever your profile is, you have to back into a lot of documentation and a lot of information to ensure that you are worthy of the loan. So having a 799 credit score is amazing, and we would all love to have that, but it is only really the tip of the iceberg. So many people assume, hey, I have great credit, I'm going to get a loan. Newsflash, that's not the case. If you have a, let's say, suboptimal income and it's been inconsistent, maybe one year you took a year off to travel to Greece and fish for a year on Poseidon's Island. I have no idea, just go with it. But if you did that for a year and you have no income in 2016, but you have income in 2017, what you probably don't know is they're going to combine those 2 years and they're going to take the average of those and say this is what your loan worthiness is based off your income. So if you have that 800 credit score, but you have average income, you might not get as much money as you think you can. So buyer approval is the first step, and very often the most important step, and one that is critically important domestically versus just New York City, and something that is universal, as I said, but it is also one that you might not fully understand until you get into the underwriting process. So don't assume that just because you have great credit score and maybe you even have great income that you automatically qualify for the loan amount you want, or you automatically qualify for the rate you want, because rates can be also affected by what your profile looks like. So that's the first pillar and the first really important element and condition for getting approval, which is you. You are the buyer, you are the person they are giving the money to. That's condition number one. Condition number two, and this is one that is so important as it relates to getting a loan in New York City, because outside of New York City, we live in these things called homes. These are freestanding homes where everybody has one, and we don't live in vertical towers. In New York City, we do vertical living, not horizontal living. So that is one of the critically important differences between New York City and Wichita, or Omaha, or Idaho, or Idaho, whatever the case may be. See what I did there? Anyway, so as we move along, the point is, be mindful that in New York City, vertical living influences your ability to obtain the loan. So what does that mean? Buildings don't instantly qualify for lending. For example, you can be living in a building that seems perfectly normal, or want to be living in a building, I should say, that seems perfectly normal, but say the original developer of that building decided to hold on to 20% of the building because they wanted rental income. That's actually, on paper, a red flag by national lending standards. Perfectly normal in New York City, perfectly normal in most circumstances, but by lending standards, that's a red flag. So understand that just because you, again, condition 1 as the buyer might be super qualified, doesn't mean the apartment in the building you want to purchase in is capable of getting financing. If there's, say, litigation on a building, you might not be able to obtain financing because litigation is a dark cloud over the building. Or say the building is operating with negative cash flow. So every building, for example, has a balance sheet, and they call it the reserve fund. And if the reserve fund is being depleted, a bank might say, hey, we're concerned that you're going to have to come out of pocket to provide additional funds to ensure the building maintains its status as a healthy building, and we're concerned that because of that, you're not going to be able to pay your home loan because you're going to be busy paying your building requirements, your building needs. So that can be a major red flag as well. So the second condition, which is super focused on New York City, is the building condition, right? You need to ensure that the building is financeable. When you go to a home in one of these second markets I mentioned, Omaha, Cincinnati, wherever it is, the only thing that really needs to pan out is the third condition, which I'll get into, which is the appraisal. So if you qualify for the loan and everything prices out properly, you're going to get the money. The second condition doesn't really exist because you're the only person living in the only home that's getting the loan. When you're buying into a building that has 99 other apartments, those other apartments do factor in to the financeability of the loan for you. So therefore, you could potentially find yourself in a scenario where you can't get the loan. So be mindful of condition number 2. It is so important in New York City and so overlooked by buyers because we get so self-consumed with this concept that I'm a flawless candidate, forgetting that that's just one of the 3 major conditions. And as I touched on, the third condition, which is sadly these days out of everybody's control, is the appraisal condition. So what does that mean? That means the bank decides, hey, you're buying this home for $1 million and you want an $800,000 loan. We have to send a third-party vendor, the appraiser, to assess the value of your home. If the home appraises at the contract price or above, that means they will give you the full $800,000. But what is often the case, because the comps in New York City are all over the map, you end up with an appraisal that doesn't actually appraise to the contract value. Does that mean the home is worth less than what you're willing to pay for it? Absolutely not. Appraisers use a very clear-cut black and white procedure to assess the value of a home. And for anybody living in New York City and anybody who wants to live in New York City or anybody who has lived in New York City, you know that New York City is anything but black and white. We have the most nuanced home situation in the world. Someone living in a building on the 8th floor might have amazing views of the Empire State Building that are dramatic at night and really make the home a special place. That same apartment 3 floors lower might be looking at a brick wall. And if it's looking at a brick wall, it's simply just not worth as much money as the one with the Empire State Building views. And that is a very substantial value differentiator. So the appraisal comes in and says, oh, it's the same apartment 3 floors lower, it's only worth X, Y, and Z less. Wrong. That is strictly wrong. But the reality is the banks and you as the buyer are limited to those rules. So do be mindful that when you make an offer on a home, you're willing to pay a certain price. That doesn't ensure that the bank agrees with that price point. I've had a major appraisal issue this year alone, and I'm sorry to report that my buyer backed out of his contract of sale because not only did the appraisal not come back on the first bank we applied with, it didn't come back on the second bank we applied with. That means my client was willing to put in a loan application twice, and both times the apartment did not appraise at the value he was willing to pay. At that point, my buyer said, listen, seller, you have to give me some sort of concession here, not an unreasonable request. She refused, and therefore back to square one, back to phase 1. So the third condition is the appraisal, and oftentimes the scariest condition because it's out of every single person's control. And if it's out of every single person's control, you're really just rolling the dice. So the best tips I can give you are make sure you do a comps assessment before you purchase a home. And if you don't have good comps, find a compelling reason to provide the appraiser with that says, hey, this home is worth X, Y, and Z more, because again, they're coming in with a black and white procedure. You have to do everything in your power to convince them that they should do a little bit more than just look at the very binary process that they're accustomed to using. So those are my 3 conditions that have to be met in order for you to get the money from the bank. Everybody wants the moolah, and in order to get the moolah, those are the 3 major conditions that have to be cleared in order to ensure that the bank's going to show up with your dough. So I hope you enjoyed today's video. We'd really love to hear your comments. We'd really love you to follow us on social media. Follow the Glazer team on Facebook for updates like this and updates throughout the week. We're always trying to provide great intel to our clients like you. Additionally, you can follow our YouTube channel. You can find us, the Glazer team, on YouTube as well. And also always catch us on social media via Instagram, because our Instagram handle, it's very special. So that's also the Glazer team. I know there's a theme here, the Glazer team. So find us, follow us, and become our friends, because we want to be your friends. Thank you for joining, and we'll see you again for another episode of Guidance by Glazer.